One. Hello, this is Dan O'Brien of Kansas State University, along with my colleagues Frayne Olsen of North Dakota State University and Dave Riplinger, also of North Dakota State University. We'd like to talk about current trends in the bioenergy field, particularly production issues, policy issues, and some far-sighted things that we think need to be on people's minds as we look at global energy demand and how that can come back and affect U.S. domestic uh, soybean oil, other oil seed usages, and the energy industry overall. David, we'll go to you first. What do you think the hot issues are to be looking at?
Well, I think hot is the interesting term since I'm freezing up here in Fargo. Um, for me, I'm looking forward to what or thinking about what's going to happen in 2025. We're a few days in. We have a new administration coming in. There's going to be some policy issues, some policies that they're going to develop or affect that will be interesting. We're still waiting on 45Z, so the rules regarding uh, how farmers, especially and biorefineries, might capture tax credits for producing low carbon fuels. That will be interesting. Uh, really concerned about the economy, and again, I kind of this bifurcation of the economy with a lot of folks doing well and some folks really beginning to struggle. What that means for gasoline demand and consequently ethanol use. It'll be interesting to see how that plays out and how quickly. Um, Also wondering, it's still a little bit early, but how many acres of corn and soybeans are we going to plant? With the role of renewable fuels, on the ethanol side, on the biodiesel, renewable diesel side, it's a huge factor. To say nothing about trade. And again, to me, trade is kind of that last really important piece in many ways for agriculture. But then, it definitely also true for corn ethanol. Our exports have been a very nice kind of silver lining in a time where things are challenging. And if those waver, that could be additional tough wins for the industry to face.
You mean ethanol exports? Is that what you're talking about
Yes, yes,
specifically?
yep.
Okay. Um, just any other, can you expand just a little bit on 45Z, where that stands and all the broader implications of that?
Yeah, absolutely. So 45Z is the clean fuel production tax credit. The IRS, the Treasury, is the regulator, so they get to create rules about how things actually are going to occur from somewhat of a bureaucratic standpoint. But again, this is how refiners or others might interact with the agency. Once we have some clarity on what's in the rules, uh, and again, maybe that's the big or the term for 2025 right now is that uncertainty piece broadly. Um, but once we have some of those details, I think we'll see how excited uh, the commodity groups are, how corn farmers, soybean farmers, crush, biorefineries are about the opportunity. I think that most of us are pretty optimistic. I think it's coming from where we were a few years ago, it's an absolute change in how business is going to be done. But there's also, some details that certain groups would like to see come through, clearly those issues where they might uh, have extra access or it'd be easier for them to access these tax credits, especially on the farm level. If we can get those incentives back to the farm level, uh, use of low carbon fertilizer, use of reduced tillage, use of cover crops, and again, getting those incentives back to the farm level, it is happening. It's absolutely happening. It's a game changer. And my question now is that going to be really coming on in 2025, or is it going to take a few more years?
And we have this transition to 45Z from the old regime happening right in the middle of a executive uh, a transition in the United States government, executive branch transition. That, as well as under the previous Trump administration, there were discussions, controversy about small refinery exemptions. There's a little bit of news about that. Just would you like to quickly comment on that?
Yeah, absolutely. So the RFS, when it was written, and the regulations that EPA put out, they had exemptions for small refiners. The original interpretation by many was that meant when the RFS started, that there was a window of time for those first few years from 2005, 2007 and on. Um, but those really came back, about a decade ago and stuck around. And again, what it did, it essentially, exempted small refineries from having to, uh, really participate in the RFS, which, reduces that policy pull, right? We're trying to support demand use of these biofuels, but then you're exempting, smaller refineries individually, but when you add them up enough where it makes a difference, and especially where we're at with everything at the margin, that type of use or that type of support is really helpful. And again, it could be, you know, a few more million gallons or another penny or two per RIN, but aggregate wise, that ends up being some pretty big numbers.
Really an issue during a time when the corn market at least had been low coming in that last quarter of 2024, still relatively low, but just strengthening some. So it's really an issue for corn farmers when they have low corn prices. Really an issue. Frayne, let's shift over to you. There's some issues that you've been watching on the macro sense. Would you like to comment on them?
Yeah, one of the things I try and follow a bit is what's happening on the global stage, because obviously that has, with exports and our dependence on U.S. agriculture and exports is a major area of focus. So just before the end of the year, it was September, October-ish, somewhere in there, Indonesia made an announcement that I think a lot of people might have missed. So they made an announcement that they wanted to move from their current 35% biofuel blend rate, mainly for palm oil, into their diesel fuel market. Their goal, the government's goal, is to move to 50% by 2028. Now, in that staging, in that progression, they wanted to move from 35%, which is their current blend rate for their biofuels, to a B40. So from going from 35% to 40%. Now that doesn't sound like a lot, but you got to realize that in a more of a global trade sense, that's pretty significant. Palm oil, when you look at the vegetable oil market, not the seeds, but the actual vegetable oil, palm oil accounts for about 50% of the global trade in vegetable oils, with soybean oil being kind of a distant second. Well, Indonesia is the largest exporter of palm oil. And again, they account for about 50% of all the palm exports. Now, when you look at their production, their domestic consumption, including biofuels, and then their export pace, and you look at their ending stocks, how much kind of reserve, how much flexibility do they have within their system, that additional 5% blend rate moving from 35 to 40. Now that 40% blend rate is supposed to occur in sometime in 2025. So this is coming up very quickly. That suddenly takes their ending stocks down to some pretty tight levels. So it really tightens up the supply-demand balance sheet for Indonesian palm oil. Why is that important? Well, because Indonesian palm oil has a huge impact on vegetable oil prices in general, including soy oil. And as the group of us were talking just before we came on, Dan noted that there's been quite a surge over the last couple of weeks in our U.S. soybean oil exports. And they are significant. And so now when you look at global pricing, U.S. soy oil is some of the cheapest vegetable oil on the global market today, right now. My moral is this, when you think about the crush spreads, when we think about the profitability of crushing soybeans, when we think about where we're going to get rid of all the oil versus the meal, soy oil prices in the U.S. have been, relatively stable for a while. And my guess is, my suspicion is, as some of these additional biofuels mandates at a global stage start to kick in, it's going to start again tightening up that supply-demand table on vegetable oils pretty quickly. Now, what is the ripple effect then back into the U.S. system? Obviously, we're going to have to wait and see. There's a lot of kind of debate and discussion about what that might look like. And directly related to that, you noted earlier, Dan, about that we have a change in administration now, and President Trump has been very vocal and very upfront about the fact that he's going to use tariffs and trade as one of those political levers to be able to get some of our trading partners to change behavior. Now, there's still a lot of debate about what that means and what that looks like. And even within messaging coming out of his current administration. There's some mixed messaging on, are these going to be very targeted kind of tariffs, or are tariff or trade policy, or is this going to be a very broad base covering kind of all imports into the US? We don't really know yet. The moral is, again, coming down the bottom line, as I look forward into 2025, primarily because of the political environment, there's going to be a lot of uncertainty. And when we have uncertainty in the marketplace, that usually results in a lot of volatility. And when I talk about price volatility specifically, I'm really talking about both upward and downward movement prices. And volatility is not something that farmers like to deal with, especially in the markets. It's something we get very frustrated with because it's almost impossible to anticipate. And it makes marketing very, very difficult. And so I know there's going to be a lot of frustrated folks coming up over the next several months trying to figure out what is happening, what might happen, what are the implications, how much should I be selling, when should I be selling, what kind of pricing points should I be looking at selling. And so the combination of, again, from a biofuel standpoint, globally, some really tightening of the supply and demand conditions on the global oilseed markets, again, driven by biofuels policy, but international biofuels policy, not necessarily U.S. policy, on top of some uncertainty about trade and the trade policies for the current administration, incoming administration. It's one of those things I think we're gonna have to buckle up and put your hat on, and we'll see how this all plays out. And nobody is smart enough to try and project that or try and forecast that. It's one of those issues we're just going to have to try and deal with. We're going to have to try and be smart about our marketing strategies. When we see opportunities, you're going to have to take advantage of them. And from my recommendation for farmers and farm managers and putting marketing plans together is, right now, when you have some time and you're doing these planning things, put some pricing targets in place. Be very specific about at what price would you sell more corn, or at what price would you sell more soy, and put those orders in ahead of time. Don't play this, well, I'll sell it when I get there. It's like, no, you're not fast enough. The market moves so quickly. It's traded almost 24/7. You're not fast enough to chase the markets. And so my recommendation over the last several years has been, be thoughtful about it, put the orders in ahead of time, work with your local elevator, local processor. You can work with a brokerage firm. However, there's different ways you can implement this. But actually put the orders in and say, if the price gets to this point, I'd be willing to sell additional bushels. And so when the market reaches those price targets, the sales have been made, you're kind of not really on autopilot, but at least it becomes more automatic. Because again, in my opinion, as a farm manager, you're just not fast enough to respond to all these changes that are going to be happening.
Frayne, I want to say, I think you forgot one important point in that, and then it's, don't cancel your order.
Yeah. Yes. Yep. When it gets close to the target, don't jump the target up. That's a common problem as well. It's like, well, it looks like we got some more run left, and well, maybe not. You can put in sequential orders. You don't have to necessarily put everything into one pricing point. So
I have two comments. The first is, we should have taken courses on behavioral psychology as a necessity for being involved in grain and bioenergy markets, and giving farmers advice. We have asymmetric pain. We really hate it when the volatility is on the downside. We kind of love it on the upside, but then it puts us in the position of what decision do we make? But on the other, so you had mentioned the number one palm oil producer in the world is turning towards domestic usage. Producer and exporter in the world.
And exporter. Yep.
That they're protecting themselves, or for whatever their motivations are, they're in their broader energy usage, they're turning towards domestic use, which will make less oil seeds from different sources available on the world market, a more inelastic supply, much more volatility there. And so we bring that, then so let's say that affects, which it is right now, the oilseed market, oilseed demand in the United States and on the world side. So we bring that back in, and okay, so we say, well, gosh, then we'll just crush a bunch of soybeans and we'll meet that need. Well, then we're probably overproducing soybean meal. So you got both sides of this thing in a very complex, I guess, uh, interwoven economic set of actions and reactions that can be affecting things throughout 2025. So I want to lay that out there. What do you guys think of that? Does that make sense?
It does, and I want to tie what you just said back into what David said earlier about planted acreage. So just to remind everybody, palm oil is literally palm trees. So there isn't a real big supply response just because you have higher oilseed prices. It takes years to be able to plant the trees to get them to be large. It takes 5 to 7 years before they actually become productive. So just because you have a short-term surge in prices doesn't mean you're going to be a supply response on the palm oil side. But unlike that, when you look at soy and soy oil, that's very different. We do have annual responses. And when you think about North America, South America, about every 6 months, somebody's planting a crop or harvesting a crop. And so there's the shock absorber, that supply response usually comes from the annual produced crops like a soybean, not from the palm oil, which is more of a perennial crop. And so coming back to David's question, well, if we do get a sudden surge in soybean prices coming into planting, and then a retracement later on, once you put the seed in the ground, it's pretty hard to change your planting intentions. And so the timing of any kind of pricing rallies or the timing of these relative price movements are going to be really important as we move forward.
Dave, let's give you the final word. Any final thoughts before we close this down?
Yeah, well, just following up on Frayne, yeah, timing's everything, right? So if there's news one way or another as we get closer to planning, it could cause major shifts. And we've seen, we live at maybe even more so up here in North Dakota with these swings in acreage, especially on the corn side. But it's going to be an interesting year. There's definitely things to watch. And I also note too, when we look at certain countries and their bioenergy policy, they're they're at more of the bleeding edge of the food security, energy security threshold. And so this is very much a high stakes decision for them to make. Somewhat different than us, where it's almost a luxury that we can have products like biofuels and think about the environment, when others are really thinking about making sure they have food in country.
And we haven't even asked the question about how a change in political leadership in Canada may affect North Dakota. We'll just save that one for the next time. Very good. Well, thank you very much, folks, for hearing us out. Thanks to David Riplinger and Frayne Olsen, North Dakota State. This is Dan O'Brien, Kansas State University. We'll be back in touch on these bioenergy market updates. Thank you.